morning, class. Welcome to Homeroom with Unc and Market Monk.
Morning, P. How's your week?
Oh, really good. I mean, it was a little slow to start the week, and then team just really carried the day for me. I had some options and quite a few shares, just given where it was positioned, and it actually it was one of those perfect setups where the I bought it the day before, and then as it dipped about 5%. So I scaled in kind of all the way, and then went crazy the next day. So works for me. But yeah, it was overall good. Still just working with some SaaS. I kept some crypto that did well. So still more selling than buying for me, just from what we loaded up a few weeks ago.
Good week. Hard to trade. I think that's the easiest way to say it
Yeah.
for me. The the 4 to 6 weeks stuff though, all that I was DCA and doing really well. Leaders over there, obviously Starbucks, Datadog, and some lithium. Um, Making a killing off. I could just trade lithium. I can't believe I'm saying that, but I could just trade lithium, and probably be okay. And it's you know, it's growth for me on my side because I remember when we first started talking all that stuff, it was just not really in my wheelhouse. And you stick to it for a couple of years, and you find the one that works for you. Shout out to Little Natural Gas too, the combo names, kind of easy trades over there, so to speak.
I
Man
remember.
as
Oh, go
well,
ahead. Yeah.
man as well. So just like sector winners, you say thank you. The you move your arrange your stop loss on a lot of things, and that trade kind of goes away, and the winners keep winning. So I mean, if you can cast your net like that, pretty good market, really good finds from the professor. For me, when you bring up stuff that we've just never heard of, um, there's usually a reason. And when you bring up stuff that I'm pretty sure they haven't never heard of, there's definitely a reason.
Yeah. Two things. I remember our very first conversation about uranium, the U's, and then UEC. I was in the backyard at my old house this years ago, and I just remember kind of talking about that sector, and then like DNN too, and we just kind of threw them all out there, and saw which one was working the best with you, and it was the U's, and then UEC, and then never so much DNN, but then kind of Uroy came in, and all that, and this with lithium, I think it's our kind of our second or third or fourth or fifth big round with lithium. So yeah, those were great. And then the on man, I mean, interestingly, when that one came up, it was kind of um, the new one, and I've kind of been on Salesforce and Workday and um, Pacey and several others, but it's just been sort of amazing how the one that doesn't have the eyes on it, low lowest volume by far, all like all the things that someone wouldn't look for, but it was it's been the best one, and it's that that clean look that we talk about, the little soap emoji that really really has carried that. And I talked to you a few times about software, and um, kind of we talk about separating winners from losers, and team winner, um, ZS winner, and a lot of those that we're going to keep finding um, are very beaten down. Have had a really bad year. Um, had popped recently, and some faded again. Right back to where they were. So it's a complicated sector, but I do think that we'll sort it out like we usually do, and there's going to be some opportunities there, and I think people who swing traders who typically buy stocks in the, I don't know, $5 to $12 range. should take a look at stocks that are 70, $90, $110, because they're going to have the range they're looking for. When you buy stocks at that price, I mean, to me, it's kind of like, well, this is a setup where I can get 30, 50% out of this thing, and I can scale in and out. And so you can do the same thing in SaaS. The scaling's different. If you have a fractional shares, you can just, doesn't matter. You can just do whatever you want. But the I get it that jump up in mentality is kind of can be kind of tricky. And for me, it was the ones that we're talking like $600 or $800 stocks. When I first got into AVGO, that was a tough pill to swallow to buy a share that big, but the percentages are there, and I think that's what you kind of have to wrap your head around if you want to move into some of the pricier stuff.
Yeah, I mean the percentages are definitely there, but this a little bit of safety too. And one of the main thing that stood out there is, a lot of stuff we find. I'm learning myself that like um, charts that have already been in that price range are just completely oversold, for lack of better terms. Are easier for me to read or know where we're going than something that has only been $6, $8, $9 or $3, $4, $5. You think of the entire quantum sector. Those were dollar to $10 stocks, and now they're
Yeah.
$40 and $50 stocks. But those prices weren't on the chart back then. A Rocket Lab, same thing. It just never really got to the price it's at now. So for me, it's easier for those bigger names that really stands out, because those bigger names usually have plenty of range both ways and plenty of levels to play off of. And I think there's a little bit more safety and stability in those than the 3 to 5s, I guess is what we should start calling them, the smaller stocks. Even though that's where we started, um,
Yeah.
percentage is great in those 3 to 5s. I get why people hang out in them. I get why I was attracted to them at first. Um, and positioning really easy. You can get 100 shares or 1,000 shares, and whether you have $3,000 or $300 or $3,000 somewhere in there, it's gonna fit for you. Um, and I can give a good example right now of like
I got to get my door real quick.
Okay.
1 second. Sorry. Yeah.
All right, where is it? The best example I have right now is and I was just gonna ask you if you could tell me what it is, but there's a stock that's $2 or $3 that has moved 50%, like 40, 50%, just on nothing. That was in our reads, and I happened to buy it because of the levels. But say some time, it was Plug.
Oh yeah. Oh
$2
yeah.
read on that, and I mean, the reason I bring that up as opposed to the other charts is because, like, if you have levels and it needs to make sense and it checks out, you trade it. But a lot of things, people are looking at the minute chart or something, not really finding an actual level to trade off of. More of a reason, and then you get into the reason, and it's a lot of fluff or a lot of bullshit, for lack of better terms. But the safety in the bigger charts, um, there's a bigger percentage of that, like trading Lilly off the 50 or trading Microsoft. Sorry, we only got 2 weeks of that.
Yeah.
They're gonna be a safer range and maybe a little less range. I mean, you still have your Roku's out there. I mean, Roku was our line on Roku is $52. I redrew a line at 84, and it's 120 now. So we're 50 from our second line.
Yeah.
That's where, for me, that's where you want to be, because especially when you zoom out on that chart, there's a lot of price left to discover. I could probably rattle off 20 of them, from like Affirmed, all the way to SGML, of charts that just are a little better in range left and stability and price. And I can bring up SGML now. P, it's $20 stock.
Yeah. Right. And one thing too that with the dollar stocks, I can read them. Sometimes I'll throw them out there, and Beyond, had a pretty clean read, recently, and everything like that. But but there's a reason we tend to stay away from those. Trading the 60 cents to 80 cents and all that stuff. And I've just noticed, like, over time that number kind of keeps moving up. And it just has to be right. I mean, I when I'm reading something under $10, it usually a mining stock or an oil stock, or something like that, where the safety comes from the sector read. Just your, it's something like this, and I've thrown this one out there a couple times with you, but so PagerDuty, and I've seen it popping up, and whatever, and there's something there. I mean, there's definitely some potential there, but there was at $12, and it never made it to 14, and then kind of saw what happened from there. Um, that could happen again. I see some 4 puts out there, so it's, you talk about safety, like there's nothing safe about that. And you can see what it is: packaged software stock, um, provision of a digital operations management platform. That just sounds like some bullshit. And so there's stocks that do what they're talking about. They're more specific about it, have a little bit of moat to them, and have some history. And I can call up the chart and see 3 or 4 lines already. And I'd rather hang out there as part of this whole software recovery than just getting my whatever 70 cents out of PagerDuty. That's just sort of how my mindset has kind of changed over time as we've been doing this.
Yeah, I'll say it about the 60, 80 cents. I mean, we tried it. I tried it. It's not 8 out of 10 on my end. I'm lucky, if you can win half of those or over half of those, you're doing good. But real easy to get bagged. And if you're trailing me, or you're I'm your indicator, so you're lagging behind me or you, and you're a little more hopeful than us, it's just the recipe to get destroyed. If you got to go to a meeting, it's even worse. So I mean, eliminating those, it just wasn't for us. We're not good at it. We're real traders, I guess. I don't know. The stories that go with it aren't for me. One point, I'm fine with just being honest with people about it, Pete. Like, there's better fish. I think that's where that really started. Was the better fish was,
Yeah.
We're not going to do that anymore. We really can find other stuff. It's safer. Yeah, you're not going to go to the moon. I can't sell you some fucking weird story, but you're going to be able to make some money and move on. And I think that's just more important. Oh yeah, Twitter, real quick, not to go too long. But these epiphany this week. Twitter's the only place on the planet that will tell you a stock has 50% or 100% range from here. Everyone else has got a goddamn price, an actual price. And why that's important? Because I have actual levels on my fucking chart, and sometimes those actually line up. I don't have to do the math on your 20% fucking pull out your ass take. So have a real level in mind, because the big fish, have a real level in mind.
Yes, and I mean, same goes for the trade. Their alert moved 30%, and the contract was $30. It's so I mean, it's and of course they're just gonna post the ones that win on that. I mean, a lot of those, like those $30 contracts. I mean, you want to talk about Theta. I mean, I worry about Theta for over a weekend for something out a month from now. And it's not 0 DTE every single day. That's just not really a way to live. And then you just see all the hallmarks of that really give it away. The phone battery's dead. Their buying powers of the $1,800. Their buying power is $3 before lunch. I mean, just over and over again. But they get engagement. I mean, I even see it, like I all I have to do is reply to one of those guys, and I see 60 of them in the Twitter thing.
Yeah.
So that's that's what it pushes. And you take any subject matter, and social media is going to push the most negative version of it, basically. I mean, there's positivity within their posts, but I mean, as far as like lessons for life, like it's going to give you the worst possible thing you can see. You mentioned sports gambling. You're just going to see a lot of 6-leg parlays. You're not just going to see someone breaking down what they think Brunson's going to do in the next game or something. It's it's all more max payout, $1 into $12,000, whatever. So yeah, Twitter's the same there. The better fish thing. There's been plenty of times where I'll put something in collabs and uh, and you'll tell me that, and then the stock I listed does in fact do well, and it hits the numbers and all that. But the better fish comment is still true. I think that's the important thing to recognize with these is that um, I saw the read. It looked like it was going to do this, but there was a lot more risk there, and so what you don't want to fall into when you identify one is that confirmation bias. And being someone, I mean, I teach about logical fallacies. I'm going to be in my fourth edition of the textbook, where it's a whole chapter. So I shouldn't in my own trading thing be like, oh well, yeah, I told Unc about this one, and look at what it did. Um, I if I go back and look up better fish, it's gonna be 50-50, maybe a little better, but that's not good enough for us. Like even if it's 6 out of 10 of the better fish ones that took off and did okay, um, that's still not what we're after because our whole system, the way that we work, gets a better batting average than that, and so that's where we hang out. That's what I've learned over the years with you.
The shitty Unc analogy for this is, I mean, you can go to the strip club and take a stripper home, and you do have a chance to close the deal. You probably also have a highly percent chance of maybe getting robbed too. The girl that wouldn't leave you alone in high school, you take her home, you're 100% closing that deal, and you're probably 90% not getting robbed. And that
Right.
analogy
Yeah.
right there is better fucking fish. That's it.
Yeah.
Yeah, that does. Who doesn't want to take a stripper home? I mean, come on, we were all 20. Who doesn't? Who doesn't? That looks great. But
Right.
the boring safety, I'm not going to get robbed, is really what you fucking need in your life.
Yeah. Yeah. Yes.
Sorry.
No, don't worry. Hey, I've done the spring break analogy before too. So yeah.
um, let's I'm gonna let you start because I'm gonna obviously I'm gonna have something to say, but let's talk a little earnings.
Yeah. So one of the well, a couple of lessons here. Team in what I saw there, and the whole kind of this software setup. This kind of taking shape, and what this earning cycle means for a lot of these stocks. In that they're you've got spy, you got the combination of spy at all time highs, and some beaten up software names, and um, there's just going to be a lot of relief. I mean, what team did going 30%? I mean that was massive. I haven't owned this thing and traded it in over a year. It's just been nothing but just hell all the way down. And it's like, okay, here's the spot, and so there's an opportunity for some very good timing here, and I think that you just really I bought more time than even than usual with this one, or I had UPS, the calls I posted were out to September, and it's just it's a read that says to me that it's like, well, in one of these next two earnings rounds or in between them, or something like that, that these stocks are going to see some sustained recovery, and it what I'm seeing in that regard, and um, runs counter to I think the broader market narrative that people have out there, is that we're in this parabolic move up. It's about to top out. They still use the term crash, even though it's just a pullback. And I think all of that could happen. I mean, Spy could definitely pull back, and we know the numbers, and it'll seem like the end of the world for those people. But there's going to be a lot of outliers in software in particular, um, just because of where the charts are, and a desire to reposition some of these things. The OI wake up is going to be a really relevant concept for us, as a lot of these take shape. And to make moves like this, they don't really have to knock it out of the park. They have to avoid some of the bad keywords in the earnings call. And I mean, of the numbers, I think EPS probably the most important, but they don't have to do anything crazy there. And I just think that we're seeing the beginning of that. These aren't one-offs, and we're going to find some that do this in this round of earnings, I think.
Yeah, I mean, I threw some jabs last week, bigger names. Obviously not. If they're in my notes, it's not for fun. But the market signaling some things, and Unc tries not to get too far off in the in the weeds. But I am a fundamentals guy, and you have to. They're my 10-year. I guess that's the best way to put it from what we do. Is
Yeah.
they're a guide for me a little bit to know when stuff's oversold or not. And I've been pounding the 50 and the 200 on the weeklies, and as buying points for bigger names. Well, when the earnings come in and they're on those levels and you're getting forward outlooks that the math doesn't equal the price, you're gonna have just that instant relief because they show they're undervalued, and currently the word on the street, or the technical term, is earnings expansion. And every report that's coming in is showing that we're going to grow 13 to 20%, 25% this year, and that's going to be like we're going 5, 6 straight quarters of double digit growth. Um, through that. So forecasting that going forward, and then getting these while they're at a decent price, I think the earnings is the opportunity for you to kind of get that entry we talk about that's not coming back. And on the bigger names, I mean, you're getting to buy them at the institutional average, so to speak. So for me as a trader and as a long-term investor, I just don't think there's a better place to be currently when the market does look and is at all-time highs a little overvalued. There's still plenty of undervalued things in it. To use my Top Gun analogy, we're still inverted in a lot of things. It just might not be those things you want to trade, and we talked about that. Like you're not going to be able to enter things when you want to, but there will be a spot for them. And we just had that spot on Microsoft, just had a spot on Lilly, and those are going to keep coming up. But the names that are like the B's and C's, I think that's where the real expansion comes for the next 2 or 3 quarters.
Yeah, and the one, when someone wants to bring up a stock and it's up, 50 to 200% from when we talked about it. I think there are moments to revisit things, and we've done it with Quantum and several others, but that's a little different from chasing. I mean, something that's up 30-40% in the last week, and even that 30-40% is well above what we talked about. Unless we're doing a victory lap or just remarking on it. And I mean, it's funny to me when it happens. Like, I get some great piece of some move, and then the stock goes crazy after that. Happened with like Intel and
We weren't buying that this week. I mean, we just weren't. We were like laughing about it and showing the full. Like, I don't say full port a lot. Pele don't, or Pac don't say that either. But those are 2023 tweets or posts.
Yeah.
I mean,
Right.
that's when that was your signal. But I digress on that.
Yeah, and it was I was like, it's the safest semiconductor. Just you shut up and buy it. That was mine in that same era, and but yeah, I mean it's so it's kind of fun to remark on that, but just don't be like, I think I'm gonna enter here and don't try to go Intel 100 to 115. Well, I don't know why anyone would do that. Who's in our room? Who's use the work? We got the next ones. So ask me about that one. Basically, it's like kind of the attitude I have with it, and I mean I get it. The stuff that does well gets on your radar, and let winners run, average up your winners. I know all that stuff, but But I mean, to me, the time to average up your winners is like you get your first 10-15%, and flow comes back in, and I keep posting the flow, and like, I mean, like, yeah, that's the time you can keep adding something you believe in long term, and all that. But when it checks out first on your end, and then if it checks out on my end, I don't even know what we're doing talking about it. Like, there's because I'll post plenty of all time high charts and all that, but it's a different kind of setup. It's
Sure.
I don't know how to, like, the slope on the chart is different. I mean, the ones that are just vertical. I mean, you can't.
Well, even with the ones that are coming up, like let's just say the last 6-8 months, they're more in a trend that you can play the 50 off the day or something. So it's still very tradable,
Yeah.
especially from an option standpoint. From when a lot of the original all-time high charts really just felt like they just had a power move. So I think even in that we're finding stuff more tradable. Um, the first thing I do on them charts, P, is like I just go look how, like, I zoom out on that 10 year and just make sure there's nothing. Um, because if there's anything, it's probably going to it.
Yeah. Yeah, absolutely.
What else did I have? Yeah, so earnings. I mean, I obviously dropped. You probably never seen me do that, but I think right now, if you want some easy money, being ahead on those or being around when those reports come out isn't going to be the hardest trade in the world. And a lot of those entries aren't going to come back on the better names or the names with the better theses going forward. And several of them, I mean, they're not new names. One, ain't none of them new names. So
Yeah.
you should be able to dissect the stories and go from there. And um, currently, the market kind of needs that, in my opinion. We're stuck in the box, so to speak. And you said averaging up your winners, and the first thought in my head is that, yeah, I love averaging up winners as long as it's at the top of my channel and I have another read. Um,
Right. Yeah.
but I mean that's kind of the plan in general when you entered it in the first place. So um, yeah, tough market for me, P, but there's going to be plenty of opportunity. It's almost like we got faked out that we had the big pullback, the market ripped, so it's done. I just don't really think that's the case. I think you just have to search a little bit um, for what's really out there, and for us that's pretty easy. It's kind of just how we work in general. For Twitter, they're not going to be able to find it whatsoever because they stay on stuff too late, too long.
Yeah, and it's that I mean, a lot of stocks are still like at or below that market maker neutral number I talk about, or equilibrium, or those key terms um that show up and tend to show up not when we're about to just have some massive pullback. They I mean, with the Iran war, you can rewind it back to when this thing started, and I said that well, the market just has to get used to this, because it's just and my whole my skepticism of it, I'm like, it's not a situation you can easily just fully end. And it's one of the reasons I thought, like, Cheney and Rumsfeld even didn't want to really get into it with them. And so once you're in that, they have the size of a military and the resources to just not do what you say you want them to do, and just play a little hardball, and keep things going. Not necessarily from a position where they can really match up to you, but anyway, it can just drag on, and so we're seemingly kind of entering that phase of things. But you still get to the point where the market kind of adjusts to it, and like you said, if bombs aren't dropping, then we can have business as usual for a while. So I think we're seeing that.
Yeah, kind of middle rotate here. The market in general, I've said it like maybe November, October, and they kind of doubled down on it now or further expand it now. But it's very forward looking. I don't think we're looking into midterms, but I do think we're September, October. Anything from now and then, it just really doesn't care about at all. It's just forward. It feels like it can weather JP. It feels like it can weather Iran. Feels like it can weather temporary gas spike. Um, all that stuff. It's very resilient currently and very forward looking, um, which also explains the quick recoveries. Because they just kind of get bought up for lack of better terms. So, um, when if that changes, or when that changes, or if it gets some kind of news that changes the what it thinks is going to happen in 6 months, that's where you see the biggest moves in the market, and most of those for me are positive. I don't see many
Yeah.
more bad. I mean, you can't put too many more bad things on the plate. Are they going to start? I mean, we can name a couple conflicts: there's Venezuela, Cuba, Greenland, Ukraine,
Right.
Iran. I mean, if any of those drop bombs, going to be a bad day in the market. If any of those just say, hey, we're actually fucking friends again, or there's some progress, it's going to be good news in the market. In my head, it's probably the latter on all of those situations. I don't think they could get worse. Um, yeah, so I mean, and then the JP thing, like they're just waiting for him to leave. That's a cooked in story. The market will probably have a good 2 weeks just on change. Um, in that position, actually changing the position. So for me, there's just not a lot left on the lot of FUD left on the table for the overall market. Um, but the regular names, or where you think Nvidia is probably a great example. I mean, Nvidia is going to rock that 175, 210 rest of the year, in my opinion. It's just
Yeah.
living there. So if you're focused on that, you're gonna miss some really good things along the way.
Yeah. I mean, yeah, absolutely. And yeah, there's so many, like so you look at like the big stories, the data center story is still, still a pretty huge one. And but the Nvidia story, the market dominance and the, you know, all of that, it just gets harder. I mean, it's just got to catch its breath. And yeah, I mean, you buy Nvidia and uh, it's going to be $300 or $500 years from now. Sure, then just buy some and don't look at it. Certainly don't fixate on it. Treat it, you want to treat that one like a bill. I still think you can, but it's not, using the work on that comes up, you know once or twice a year for us now, and that time that it does, that's the time where, where you really get into it. So yeah, I think you're right on your read there, and that's going to be very frustrating for people that are the spy traders, and the reads they try to make on it aren't matching up with what's happening. And I remember that with Tesla, where people were trying to pair those two things. And you look at that old room, and that was the most common things that were posted were spy and Tesla at the same time. And that was I guess my first skepticism was the rhetoric surrounding the way those were talked about. And that's that's really, that's really hard for them because they just don't. And I talk about this with like the flow guys all the time, and almost every one of my tweets about it, it's just like, hey guys, these setups are right there. Someone knows, you can see it before it happens if you're looking at the right thing. But the stuff you guys are looking at, it's just way too noisy. And I with well, I won't say it. Anyway, everybody who works with that stuff, is a lot of times looking at the wrong thing. And whether you built the tool or not, your best stuff, like, is not what you're looking at. And so I don't know. I don't know why no one else really seems to see that in that material, but I'm fine with us just doing it. It's cool. If one or two, somebody out there sees our tweets, I do want more people to notice what we're doing. Sure, but I don't obsess over it. I don't just I look at flow more than I look at our engagement, and maybe that's the detriment of being a promoter, content creator, but I never really tried to be that. So anyway, I try to get better at that, but it's still not my main focus.
Yeah,
We just do what we do.
just do that for fun. Um,
Yep.
the what they miss is or what's going to be missed. Well, last thing I'll say on this is um, I don't know if it's the right term, but it's the right term for me. Is emerging markets or new markets, and you know, I think Nvidia, since it's the one we're talking about here, there's not going to be. We just had AI. That's its new market. You've seen it, so I shouldn't have to sell you on the concept of what a new market will do to stocks. Um, but people, holding on onto that story and not understanding the runway, like we've seen with nuclear. Like it had a great story. Those charts did great. We all made money. But then when you look at it, it's like, man, that's 10 years down the road. If so, a little shorter runways, and there's great opportunity in the market not to give away too much or help these fuckers out too much out there. But what's going on with Hertz, and I believe it's Uber, and handling their fleet for their the robot taxis or whatever they're trying to do. There's never in their history have they gotten money for that. And the same with
Yeah.
Netflix, same with Netflix and the advertising, and looking for that kind of stuff, new market share on big names, expanding your business, so to speak. That's where it's at for me. That's where the real growth is going forward, not just in defending market share by the bigger names, so to speak. And yeah, I mean, you can put that in any sector, right? Like even um, the medical side, Hims, NVO, Lilly, Invax, Bristol Myers Squibb, Pfizer, yada yada yada. That's a big thing there. But who's emerging? Those are probably going to be the better moves on a chart than just the ones that have kind of already gotten the story cooked in.
Yes, and I think, and I'll get to some boring stuff after this, but when we're talking about some of the sector, winners and losers, a lot of these companies that transition from, just burning a ton of cash to, some actual signs of profitability, the DoorDash of the world and all of them, and maybe Lyft might do that, but the that's really important, and how much debt they have and when they have to finance it, or refinance it. That's going to be a big story too, because the companies that have some debt problems and refinancing, because I think, I mean, they're probably trying to put that off as long as possible till rates are lower. I mean, that probably seems to make sense for what a lot of them will be doing. But if they're up against it and they have to deal with that debt, that story, that'll be another leg down for some of those names. So you'll probably kind of see it in the flow. But I mean, part of the reason the team did so well is that they kind of got that right within their whole numbers and presentation and whatever. That it's not like it was great, but it's like not as bad as they thought. And so that's always something you circle around too. Is just, well, what are the actual expectations, and can they at least beat those and control the story, a bit. So what you mentioned with Hertz, I mean, if you have something concrete that's developing that people can understand, then a lot of those will sustain some moves up that otherwise may have just been a pop and fade. And then last one I'll mention is Nokia. That it's like, oh well, they don't just make ugly outdated phones. They got something else going on, and that telecommunications story. BlackBerry's kind of going through the same sort of transition. So and Kodak. I mean,
Yeah, that was what I got.
Kodak seems like the ultimate dinosaur of a stock that you're not. I'm not going to the kiosk and printing photos anymore. Why is Kodak even still around? So some of those older names, understanding what they do now, Xerox is going to probably be one too. But I mean that will be something that will we'll be looking at as well. So, and I have fun with those. I love to trade stuff like that. So looking forward to it.
Nokia always stands out to me. Old Penny over there. This is the candle she got bagged on and was running
Yeah.
around Discords telling everybody, I think Nokia's running.
Yeah.
I'm gonna forget shit. But look, you're unbagged now.
Yeah.
I hope candle sales carried you through that 6 years. All right, let's move
Right.
on.
All right. So some boring stuff. Copper. All this chaos in the world, and gas prices and wars and whatever, and it's holding here at $6. So we're still kind of middle of the zone from the 5 to 7 move I talked about for a long time. That historic drop, gave you one more shot. It was above my line, but still, the real, it's a diamond hand through my zone. I didn't do that. I maybe kept longer than you on some like SCCO, but not by a lot. FCX I revisited a couple times. So what this chart tells me is that there's still some steel names you can look at, a few aluminum. So there's some trades in there, but it's pretty healthy overall.
Southern Copper, do you make it past 130?
Yeah.
Oh shit, you killed me.
Five shares left of that. So.
Yeah, not it, boss.
Yeah.
I had good ads too, but it's just how I one thing I do and I don't look back on and I always take it as a positive. If my plan worked, I shouldn't be mad.
Yeah. Yeah, absolutely. All right, so then gold and silver. Silver just still it's giving you the better range, and these bounces like this, if you want to trade this right now, I think you're just trying to red day ads, and just understand that you might have red day ads for the next 3 or 4 days, and then you'll probably get some relief, and so rinse and repeat. Find your spots on the chart that you like. It's not. I'm not really building long-term positions in silver. I buy physical silver, but it's just it's doing what we said, and you're still you're looking for what's the new normal, and I'm still skeptical that the new normal is up here, but not too far away. Maybe lower 60s for silver is kind of what I'm thinking, but I don't know where you're at.
I'm still 50. I still want that 50.
Okay.
I'm just pulling that out of my ass. Don't take anything out of that. But it's just the 26, 100% from there need to be around that 52. That's just me. That's a good point right there. Is like the market's forward looking 6 months. Probably going to take that 6 months to happen.
Yeah.
If I'm right, or if that's the it's not an overnight thing. It's gonna bleed out. If it does happen quick, I think it would have to do a lot with geopolitical easing in that.
Yes.
Yeah, there you go. Which gonna take some time.
Yeah, absolutely. All right, and then oil. Another crash on Friday.
Was that the UAE news coming in, you think?
Yeah. No, I think so. And but I'm kind of jest a bit. So to me, the I guess the floor on this that I think would be aggressively defended is going to continue to be like 92, 88 to 92, something like that. I think just the reality, the real world reality, the paper oil is still below, what you can't print the barrels, right? And
sure.
And so those can stay pretty far apart, but they can't stay too far apart. So like you can't go down to $75 right now. It's just it'd take a long time for for that to happen. But if the the word on the street price, or whatever, the people actually moving the shit around, if it's 110, 115 is really the reality, yeah, they can keep it at 100, or they can keep it at 95, 92, and position where they want to go. But we're gonna hang out here a while. 90 to whatever 120, I guess. But I don't think we get to $200 oil personally. But things go bad 150 or 175. But you're talking heavy intervention to stop that. If that happens, that's whatever muscle we have will be devoted to keeping that from occurring.
Yeah, it's one of those, being above 100 or whatever, it can do it, but it's about the time it's up there. And some people can handle it for a while. Some industries can, and some can't handle it very long. But it doesn't come out in the wash, a quarter or two down, until a quarter or two down the road, at least on their end and their numbers. So um,
Yeah.
I would just keep track of how long it stays up here for. I don't think OPEC's going away, or like I don't even think they can operate outside of OPEC, to be honest with you. So the UAE news might just be a temporary story, not any kind of relief. But with the Strait being the kicker here to get it back below 100, so it's very tied to that. But the negative effects, it's kind of like a hangover, right? Like we're still drinking, like we'll be hungover in
Yeah.
the morning. It's just how much are we actually going to have to drink? So that's where I'm
Right.
so short term, not really concerned about it. But the longer it goes, the more I'm gonna put it into my theses.
Yeah, absolutely. I mean, the biggest outcome of all this might be some live golfers coming back to the PGA. I don't I don't
Yeah,
know, but
yeah, I guess
yeah,
you're not wrong.
yeah. Um, and all right, natural gas. You know, big
Well,
fan.
one quick, real quick. It's a quick one. On the
Yeah.
gas side, are you gonna get to $5 out there?
No, I don't
Okay,
think so.
okay.
Yeah,
I just read an article that there was like 5 states that were below $5. They were you guys, they're right there, Texas, Oklahoma.
yeah. It. I mean, if it would take a couple months of this, maybe we would, but it'd be a lot of 499. They'll just
He wouldn't.
nobody wants to be the first station on the block to
Yeah,
to cross five.
I
So
got you.
yeah. All right, yeah, natural gas. Uh, Still like a lot of what I'm seeing here, and there's still plenty of chances to add some things. There's some stocks in the 80s that are probably going to be 110, 115, something like that, and then there's some in you're going to see a lot of 32 to 36 and 38 to 45, and just combo names. Stay away from leverage. I think you'll be good.
Yep. Love the sector still.
All right, and then well, actually, let me go to lithium real quick. Um, yeah, this just you zoom out, and we're still just doing the thing. I mean, I don't the psych levels on something like this aren't really as significant as some other commodities and sectors. So there's still a pretty clean look when I kind of reverse engineer the flow on this a bit. The um, high 30s, 40 bucks, something like that. I mean, I think that there's still that there's just a very strong demand for batteries taking shape, and so what I look for in the sector now is any kind of breakthroughs in battery technology, make them smaller, make them last longer, whatever chemical process this particular stock does, and that'll come up. But the easiest way is just who takes this stuff out of the ground, and we're going to need a lot of it. So that's where recovery continues, I think.
Y'all just keep buying fucking SGML above 20 for me. Twitter, that's your free play. I won't bag you, I promise. Get me to June. Um, the good thing over there for me is the smalls are profitable, so they're keeping the lights on, so to speak, while I hold this pretty
Yeah.
sizable position in another one. Um, Probably the first sector. I just didn't let go and nailed on the Earth side. I guess silver a little bit too, but silver I felt like I lucked into. Does that if that makes sense?
Yeah, yeah.
Like I just grabbed it on the process. Where lithium, granted, I got all this stuff from you, but when I said it's time to go, um, not that I was on my own, but I was definitely leading the idea on that one, and to have it work out for me, very happy with it. And to be honest, easier trades. And I never like you don't really have to worry about news as much in those, especially once you get the ball rolling. So understanding the tolerances of those charts and just letting it happen. Good to go, and plenty. I'm with you. Plenty more left. I think you said 35 or whatever. You were 25 or 35. It's 40
Yeah.
bucks for me, P. Like we're going to 40. Just is. I mean, it might just be a test, but um, we're at. I think we're at like 6 when I started. Lithium was at like 5 or 6 when I started trading this.
Yeah, I
Um,
mean it. So if I just go into this, this era of the chart, I mean, yeah, $40 makes sense as a new resistance, basically.
yep.
Um, yeah, absolutely. All right, so then corn, real quick.
Said corn.
So there's a lot of you're starting to see, people on Twitter talk about trading wheat and corn and shit like that. And what they're seeing is they're just seeing this recent surge and whatever. I think they're trading it wrong. It's fertilizer was kind of where you wanted to
Yeah.
be, and we caught it. I like my entry there, and that's a sector that can pull back significantly on news. But the thing is, the fertilizer stocks aren't going to tend to bag you as much as messing with corn futures. Like so, or the a corn ETF or a wheat ETF. That I saw that same shit with Russia, and that's a recipe for disaster. So I would tend to stay away. You want to mess with corn? Let's talk corn flakes, and we'll get into some cereal stocks or something. But anyway, yeah, those will come back around too. But yeah, I just wanted to bring this one up because I do see it on the socials, and it's a funny thing to watch, but it's not something I'd follow them into.
It's
Um,
the FUD out there is definitely where I don't know 18 months from world famine. I mean, I hear it all the
yeah,
time. So
yeah,
I get where they're getting how the path is leading that way. But they usually get too direct, so to speak. They get too focused in, like they can find the one thing, where the one thing Professor already found, and it's a little bit more covering than just corn.
yeah, yeah, exactly. Um, all right, so then good old 10-year. Um, I a couple days ago said they're probably going to intervene soon, and they did, and we pulled back a bit. Um, Definitely, I mean the best setup here for us is for them to walk this back down a bit, not to you know get any panic candles or anything dramatic. You just want to see them in control, because when they're exerting control here, you're going to avoid some of the pop and fade looks day to day that happen. So yeah, you want this to calm down, and it might not. I mean, it might just shoot up to 450, 4.5 or something like that. So it's just something to watch. It's not something I really uh, try to predict from this spot. You know, overbought, oversold aren't relevant words for this thing to me.
Sure.
But you just want to see it some smaller candles take shape and,
What's your
and
hey?
move
Throw
forward.
weekly wicks on that real quick for me.
Oh, sure.
Yeah, just slow down. I'm just slowing the chart down a little bit, right?
Yeah.
That makes
Yep.
sense. So
Yep.
yeah, I mean you have a range. You have the 5 and a 360 range just in there, just on what you had up. That after
Right.
we came up here, we kind of lived in, and then lower highs really. The floor is kind of staying on that 4 though. So yeah, we're just in a 4 to 450. I mean, this is where we are. I mean, so on the top end of that currently, that's how I would dissect that. I've noticed P that when this gets moving faster, I mean, it's not faster, slow, up or down at a faster pace. We don't leave. We don't leave inside the box, and we usually go towards the bottom of the boxes real quick. And when I say boxes,
Yeah.
pre-market high, pre-market low, previous day high, previous day low.
Yeah, no, exactly. I mean, I still for reasons I don't understand or necessarily even try to dig into too much. Bonds are the biggest priority of the administration, and you wouldn't think that, given, like, you would think that Trump, flashy, pump the stocks, like that would always be the main focus, the big names that everybody's heard of, and I turn these into winners or whatever. But the people behind the scenes, the power behind the throne, or the financial deep state or whatever, is very focused on bonds, and they don't want this to get out of hand, and they don't want to turn into Japan. I think it'd be the way I'd put it. There's this broader thing I kind of ruminate about, and want to talk to you as soon as I'm ready to talk about it. But the ways in which the U.S. is becoming more like China, and the way China is becoming more like the U.S.
Yeah.
and how those two things meet. That's kind of the big story mechanisms of the universe kind of thing that is going to shape a lot of what happens over the next decade. So we got plenty of time to get into that, but you see a lot of signs of it. So I think that'll be something we'll deal with.
Yeah, I see where your head's at there.
All right, so then good old Bitcoin.
Not really in my news. Let me start here. Not really in my news lately, P. That's the one thing I noticed. We do get a little bit of a lift, kind of bullish trend here
Yeah.
lately. But above our levels, kind of where we said it was going to hang out. If we wanted to see more of a move to the upside, all that stuff. But quiet. Outside of like the big guys buying it, that's the only news I really heard is BlackRock's buying it, more Bitcoin or stuff like that. But just not a lot of push behind this relief in Bitcoin on my end.
Uh, yeah, and I mean, I got my eyes are on 92. They're not on 150 or something.
Sure.
But kind of grinding up to that. I couldn't be happier with my entry here. That this gave you several chances under 132 to build something, and I've got a position size I'm comfortable with, and you can see we're still well below my first line there, and I don't know that we'll get there, but definitely could see 220s or something like that. And then coin is the one that is still giving you a chance, in my opinion, long term. I mean, they've had some FUD, and the FUD has been to bring it down, into the middle of this zone to hang out here, and I think that while the bottom half of this zone's kind of where I want most of the ads, to still add here under 220, and before it gets into that 220 250 box, you still got a pretty good shot to build something here.
Yeah, MSTR. I finally got a trade, and I paper handed it. Of course, that's what I do. But good
Yeah.
trade. Like again, if your plan works out, why would you complain? Coin. Only thing it was in my head last week, and I didn't say it, but probably should get it out there just because it's such a good one-liner. But P, we said 200 ain't shit on coin, but that 200 SMA sure is the shit.
Yeah, right.
Yeah, longer here the better. I mean, if you get 4 or 5 months of adding down here, um, just the relief back to the 50s, 275. We'll call it 300. I mean, what are we doing? Talk about not trading the 3 to 5s and trading the better names that do have a percent, that do have a price already discovered. Well, I mean, what are we fucking doing here? And also on the other side of it, Our entry, yeah, it was way fucking better. Me and Professor argued about these two numbers for a little bit. 72.53, 76.45. We argued about which one was better. Well, son of a bitch, they were both great. But we're down the road now. Those numbers probably ain't never coming back, so we got to find another place to enter this long-term thesis chart. Just a good example of that for people in general. You should be excited on coin off the 200.
Yes, and so I mean, some of the FUD that you see on Coin these days, you can see it on my screen here. Bipartisan crypto bill would ban firms from offering bank-like stablecoin yields. Coin currently offers 3.5% on a stablecoin yield program to some customers.
That ain't bad for them. That's bad for you.
Right? Yeah, exactly.
I'm sorry
And
I can't give you perks anymore. The government said that's not bad for a business. That's actually great because they don't have to cancel it. The government did.
yes, and so if we move in the direction of the golden eagle coin, the thing that you talk about, coin's going to be a big part of that too. So the flip side of the government, taking the wheel is that they're going to use coins the Rolls Royce name of all this shit. So crypto services over crypto mining, that old story that we were on years ago. That's what this is. So the short term FUD of stuff like that, of the old crypto world dying, that's all fine for them, and they'll be part of the whatever the new version of it all is. So
You really
anyway,
said,
yeah.
I don't want to get long here, but you said if happens, if my American balding coin happens, if.
Yeah.
But answer one question for me real quick. This will give Twitter a little how we actually think. Where do you go right now and use any coin to pay for anything with?
What do you mean? Where do
Any
I
coin.
go?
I give you Fartcoin, Litecoin, Bitcoin, Ethereum, any of them. Where do you go right now and spend that to make any kind of purchase or transaction? Where?
Um,
Yeah, you had to think too long. That's exactly the point, though.
well, right, yeah, no, I mean, I was gonna say Square, like they're trying to, yeah.
It ain't happening. It just ain't happening. I mean, we're
Well,
fucking.
it all still has to convert. I mean, that's what Tether and all that
Yeah,
stuff. You don't actually do anything with it. You
yeah,
got to move it back to fiat.
yeah,
Yeah,
yeah. So
yeah,
that, I mean, that ain't it ain't happen. It's not happening. So that's got to happen. I mean, this is what it is. That's the
right.
whole point of it. It's,
Yeah,
yeah, I digress. A little spy action.
yeah, yeah. Let me.
I'm. It's pretty simple, P. We need to pull back. I mean, that move was fast. I'm kind of waiting for it. You'll see me golfing until it comes. Buck, I was 700, psych, but that's gonna get steep from, if we get another $5 or $10 on it, that's a 5% pullback, which is getting pretty steep to have. Yeah, I don't know. I said it last week. It's okay to say you don't know or that you didn't see it coming, and I'm still of that mind that this move just happened a little too fast.
Um. Yeah. I don't really have a firm downside number to scale in and out of or anything like that. They're still just uh this 660 December, I guess. That seems to be the one. It just doesn't have a real complement right now.
Yeah.
But that's them kicking the can down the road from June to September, and now we're talking December. So kind of the rest of the years is sort of mapped out a little bit, I guess, based on that.
Interesting. Yeah, no, it's a tough chart to base opinions off of right now. Um,
Yeah.
the front lawn comment we always make about of America is the stock market, and it needs to be looking good. I think with the current president, then that might have a little premium built into that, so to speak. Um, but yeah, I mean, I hate being a bull and anticipating pull. That's where I don't like being. Is I'm a bull share trader. If charts go up and to the right, um, but anticipating and looking for pullback is the worst spot I want to be in an overall market. Um, yeah, and that's just where we are.
Yep. Absolutely.
So short
Um,
term, short term consolidation with probably leaning more of the pre market red days kind of not holding, but being the biggest part of the move, and then not really retracing at all. I think that's what I'm looking for.
Uh, yes, no, I think so too. I mean I guess so when you get to that, I'm not even seeing the 700 psych really be anything. I mean, it feels to me like you'd have to have a pretty uh, you know a really bad morning or something for anything to really wake up here. Um, Otherwise, we just keep grinding. So I guess that until further notice, that's sort of what we're looking at to me.
Still on the no bombs market goes up,
Yeah,
huh? Wow.
yeah, I think so.
Yeah, perfect. Are you ready to work, Pete?
Yeah, yep. I'll just grab a coffee and then we'll get to that.
Perfect. Like and subscribe. Link somewhere, people.